Hello everyone and welcome back to the channel. If you've looked at your investment portfolio lately, you've probably felt your heart do a little flip-flop. One day it's up, the next it's down, and the day after that, who knows? The market has been on a roller coaster ride, and it's completely normal to feel a bit dizzy and maybe even a little anxious. So today, let's take a deep breath, cut through the noise, and talk about what's really happening with all this volatility, what might be causing it, and most importantly, what it means for you as an investor. So, what's shaking things up? Well, it's not just one thing, but a cocktail of factors. First up, we have inflation. You've seen it at the grocery store, at the gas pump prices for just about everything have been climbing. To combat this, central banks around the world, like the Federal Reserve in the US, have been raising interest rates. Think of it like this. When it costs more to borrow money, both people and businesses tend to spend less. This cools down the economy, which is the goal, but it also makes investors nervous about future company profits and economic growth. This uncertainty is a major driver of the market swings we're seeing. Then there's the global stage. Geopolitical tensions, like ongoing conflicts and trade disputes, create a huge cloud of uncertainty. These events can disrupt supply chains, affect the price of essential commodities like oil and grain, and generally make the global economic picture look a lot less stable. When news breaks about a new development, markets react, and they often react very quickly and dramatically. It's like the market is trying to price in a future that is incredibly difficult to predict, leading to these big daily swings. And let's not forget, we're still dealing with the long-term economic echoes of the pandemic. Supply chains are still getting untangled, labor markets are shifting, and consumer behavior has changed in fundamental ways. All these moving parts are still settling. And that process of finding a new normal is inherently volatile. Companies are trying to navigate this new landscape, and investors are trying to figure out which ones will succeed. Okay, so that's the why. Now for the million-dollar question, what's next? If I had a crystal ball that could tell us exactly what the market will do tomorrow, next week, or next year, I'd be on a private island somewhere. But since I don't, we have to rely on strategy and perspective, not prediction. In the short term, it's very likely that this choppiness will continue. The factors we just talked about, inflation, interest rates, global events, aren't going away overnight. We might see more big swings as new economic data comes out or as geopolitical situations evolve. It's a time for caution, not panic. But if we zoom out and look at the bigger picture, history gives us some valuable perspective. Market volatility is not a new phenomenon. It's a normal, albeit uncomfortable, part of the investing cycle. We've seen periods of intense volatility many times before, followed by periods of recovery and growth. The stock market, over the long term, has shown a remarkable ability to trend upwards, weathering all sorts of crises along the way. The key is that phrase, over the long term. So, what should you do right now? This is not financial advice, but here are some timeless strategies that have helped investors navigate choppy waters for decades. First and most importantly, don't panic sell. Making emotional decisions based on short-term market movements is one of the biggest mistakes an investor can make. Selling when the market is down locks in your losses and means you'll miss the eventual recovery. It's often said that time in the market is more important than timing the market, and that's especially true right now. Second, review your portfolio and your risk tolerance. Is your portfolio still aligned with your long-term goals? A well-diversified portfolio is your best defense against volatility. Diversification means not putting all your eggs in one basket. Spreading your investments across different asset classes, like stocks, bonds, and maybe even real estate, as well as across different industries and geographic regions, can help cushion the blow when one part of the market is struggling. If seeing your portfolio drop makes you lose sleep at night, you might be taking on more risk than you're comfortable with. This could be a good time to reevaluate and rebalance. Third, consider this a potential opportunity. For long-term investors, market downturns can be a chance to buy quality investments at a discount. A strategy called dollar cost averaging, where you invest a fixed amount of money at regular intervals, is perfect for this environment. When prices are low, your fixed investment buys more shares. When prices are high, it buys fewer. Over time, this can lower your average cost per share and smooth out the bumps. Instead of seeing red in your portfolio and panicking, you can reframe it as a sale on the stock market. Finally, focus on what you can control. You can't control interest rates or global politics, but you can control your own financial plan. You can control your savings rate, your spending habits, and your investment strategy. Make sure you have a solid emergency fund that was cash set aside to cover 3 to 6 months of living expenses. Having this safety net can give you the peace of mind to leave your long-term investments alone and let them do their thing. Remember, building wealth is a marathon, not a sprint. These volatile periods are the challenging hills on the marathon course. They test our discipline and our patience. But the investors who stick to their plan, stay diversified, and keep a long-term perspective are the ones who are most likely to cross the finish line successfully. This is a time to be a strategic investor, not a speculator. Focus on quality companies with strong fundamentals that you believe in for the long haul. The headlines will continue to be noisy, and the daily market movements will continue to be dramatic. Your job is to tune out that noise and focus on your personal financial goals. Keep learning, stay disciplined, and trust in your long-term strategy. This too shall pass. I hope this breakdown was helpful and gave you a bit of clarity and confidence in these uncertain times. It's tough out there, but with the right mindset and strategy, you can navigate it. What are your thoughts on the current market? Let me know in the comments below. I'd love to hear from you. Thanks so much for watching, and if you found this video valuable, please give it a thumbs up and subscribe for more content. I'll see you in the next one.